Well, this week's Consumer Price Index found that prices for food rose by more than 12% year over year in June. The new data from the Bureau of Labor Statistics shows that shelter was up 5.6%. Prices in some categories have dropped in recent weeks, but not enough for many people to feel a difference. Stacy is here with me now. She's the Director of Strategy at Optimal Capital. Thanks so much for your time.
Yes, of course.
And Francis, the key factor contributing to inflation is mostly energy. Gas prices, of course, accounting for much of that. And we have seen gas prices cool a bit. Why is that not the case for so many other things that are still so expensive?
No, it's so true. So CPI lags these prices quite dramatically. So energy has been the key contributor. And even though those energy prices have moderated, they have a 1-month lag. So we aren't going to see a dramatic reduction in CPI with energy prices just kind of moderating. Some of the other commodities have kind of fallen off of a cliff. They've gone down a little bit more dramatically, like copper and lumber. But food has a 4 to 8 month lag. Used cars have a 2-month lag. And owner's equivalent rent has an 18-month lag. So that's a big component in CPI. And so this is the mechanical reason why CPI stays sticky. These prices are dropping, but the CPI is remaining high, and that's what the Fed's paying attention to.
Yeah, that's helpful to understand. Well, what can the Fed do right now? What should the Fed do right now? Because apparently this is more complicated than many people might think.
Okay, so the Fed is in an absolutely terrible position because the truth is that they set the range for the federal funds rate, but traders are the ones that are actually pricing that in. And so Jerome Powell has absolutely no option to even sound like he's wavering for just a second, because what happens is markets will run and anticipate that, and financial conditions will loosen. The financial conditions have tightened, which has caused some demand destruction, which is the plan, which is trying to bring these prices down. But if he sounds the least bit dovish while we're waiting for that lag effect to CPI, bond traders and equity traders are going to run and price that in, and that's kind of going to undo what he's doing. So he's in a very, very tough position.
Yeah, would not want to trade places with him. Well, wages are up even though they're not comparable to the rise of inflation. Why is there such a disparity in those numbers?
It's so interesting because some people were not able to hire, or some people were hesitant to hire, particularly now that the Fed has created a sentiment, which is demand destruction, which is actually a slowing in growth. And so, for instance, my office is in Traverse City, Michigan, and you can walk in and you might wait 45 minutes for a table and the restaurant's half full. And that's just because they're short staffed. And so these businesses unwilling or unable to hire is keeping wages lower and than the inflation rate, which means real wages are negative, which is wages minus inflation. The other thing about the Fed is not going to pivot because he wants to or it wants to. The Fed is going to pivot because it has to. The risk with him not being able to back down whatsoever is that there could be a policy error. When you're raising rates 75 bips, now we're talking about 1% potentially in July because of the CPI number. People make credit card and other payments 30, 60, 90 days. Sometimes we're not going to find out for a minute, if raising that much pushes somebody over the edge, and therefore what the default rate is going to be as more and more people start putting things on credit cards and their interest rates are going up. So that's the risk for policy error that Powell's sort of got to walk that tightrope.
Yeah, and Francis, would love to get your insight. There are some reports out there that based on how the Fed operates, slower wage growth could actually help bring down prices and ultimately mean less of a pinch for the average worker. Are you buying that?
Well, there is some mechanical truth to that. The problem is that these things have lags, so it's not necessarily felt. But the reason that that's true is because the growth in wages puts more pressure on the profit margins of companies and the equities, et cetera, et cetera, et cetera. And so the problem is stock traders and bond traders try to price that in, which makes people less enthusiastic about investing in companies, which makes companies pull back from hiring. So there's sort of there's a concatenation of events that occurs that's kind of like a domino effect. Now, what he is saying is his justification for a soft landing, Jay Powell, is he's saying that if he can get this ultra tight labor market to loosen a little and get these wage pressures to come off, then that's going to create some demand destruction, because if the labor market technically loosens and the unemployment rate technically goes up, those people are going to be buying less. What's really unfortunate is you can divide the country into literally the haves and the have-nots. The upper 40% owns, they at least have assets. The stock market is not doing well this year, but they at least have those, available assets. About 60% of the country doesn't even have savings. They are completely relying on credit cards to pay for that 12% increase in food. And then their interest rates are going up like crazy. I've heard of even some credit cards having a 30% interest rate. So when you add those percentages together, the poorest people are paying about 50% more for the things that they need to survive. And then the other thing is those people got stimulus checks, right? To help them during the pandemic. But now to fight inflation, if you give them stimulus checks, that increases demand. We saw that occurred. They wanted to buy things, they wanted to spend. Now you can't give them stimulus checks to help them out without going against the fight of inflation. So we're really in a catch-22, and it's hurting the lower echelon of society the most.
Frances, Stacy, we certainly appreciate that insight. It is hard to hear, but it's important to hear. Thank you so much for your time.
So true. You're welcome.
Thank you for watching. Go to newsnationnow.com to find NewsNation on your television provider. And don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.